Attention business owners, want technical proof we're heading into a recession so you can change before you need to change and take back control? You either believe in the fundamentals and economic indicators of the past or you don't. Based on the present fundamentals and indicators, they're signaling a recession or worse, a depression. Review the yield curve on the US Treasury bond. When the 10-year yield is below the 2-year yield, the indicator predicts a recession. Please look at the graph in the below article reflected in our LinkedIn profile. A provocative question raised in the article hints that we could possibly substitute predicts for causes a recession. John Milden of Milden Economics has a very insightful commentary. See his article in our LinkedIn profile. He wrote a couple of months ago. I agree with most of what he is saying. However, I believe New Zealand does have some saving graces though, and is uniquely positioned but not out of the woods. Top New Zealand economists will say it's not obvious what has caused the surprisingly weak New Zealand business confidence, because New Zealand still has population growth, firm commodity prices, especially special note here is Fonterra's and the timber recently performance announcements, which will have an impact on our GDP. And continued fiscal stimulus is the third. Also, these commentators believe in the advent of a US-China trade war, New Zealand will continue to perform better than other countries because our products exported to China are consumer products, purchased for the Chinese domestic market, not products that are used for added value manufacture and then exported again to other markets outside of China. For example, a country that does this is Germany, who's in a recession or very close to it. This could be the scenario for New Zealand, and a useful indicator would be to watch the Chinese retail sector to see if this changes negatively in the near future. The challenge here is credible data. The US-China potential trade war is another trigger to look out for, because if this was to have an impact on Chinese manufacturing, that wealthy growing middle class will have less money to buy New Zealand goods. One other trigger to be on the lookout for is oil. If this goes up, it is like a further tax being imposed on disposable income, not only for New Zealanders, but the world, with obvious consequences on economies. So the perception of a US-China trade war causing uncertainty, impacting New Zealand business confidence and investment decisions may be part of the reason. The other reason could be that New Zealand business owners are experiencing it where it counts, in the back pocket. Very important considerations to factor include the lag and accuracy of economic indicator reporting. Be careful, the horse could have already bolted already. And we making decisions using unreliable or distorted data. Business owners, trust your own company numbers, because that's where it counts. Understanding how to maximize and extract value for New Zealand businesses preparing for sale is what Cornerstone does. Worth a conversation? Give us a call. Thank you.